highlight. One thing I said, and I'm not going to play a recording back for this particular highlight, it was on a big event day, the day after a big event day. In this case, it was an FOMC statement that comes out, creates a lot of volatility, no surprise, creates a little bit of a rally net from the 2 hours after the statement gets released. We were up as many as 50 handles, 70 handles, but then settled in to be up about 15 handles for the close, which it went up and it went down and it rallied, ended up net from low to high over 100. And it closed 15 handles from where we started when the statement was released. But here's what's important. What happens after you take an entire Asian session, which is essentially US nighttime, and then early morning hours is the first half of the European session. So you take their markets to digest what our Fed did, and then our overnight markets, right? And wake up and say, well, where are we when the bond markets open up at 720? And the S&Ps, the ES, this was down. What was it down at? 70 handles at that point. So it not only gave up the little bit of rally it had, the plus 15, but it gave up an additional 70 handles, and we were going to open up quite a bit lower. So the first kind of moment that investors and bigger money institutions had some time to digest the statement and everything else through Asia, through Europe, and through our overnight session, they were like, these prices are not cheap. There's still more downside. There's still more headwinds. And so we open up in this particular case at an 0750, and we break, pretty much never are able to get our head above water, but it was bearish. And this combination, this context is easy to understand if you know how to read a market from short, medium to long term, how to read big events, economic numbers, or central bank activity or geopolitical events. In this case, central bank action, inaction, their statement, their guidance, and everything else. And then so always know what's driving the market. But when you get that, when you get like, okay, they can't even hold on to a little bit of the rally that it had, and they were really looking for the Fed to pump us up, meaning give us a relief rally that we could have for a few days at least. Nope, couldn't even last halfway through an overnight session. So the downside being the right side is a good step one when you have that context understood. That in and of itself isn't going to make you money, but the probability of that direction is going to give you now a chance to play it from the right side, so that it's easier to pick good locations when you're on the right side of the market. But still, you got to pick good locations and using the tools that we have and keep them simple. The way that these colors come in are not simple, but the uses of them are. And it all stems back to other people's positions. You got to stop thinking so much about what you're thinking and take that and say, how does that relate to how millions of other traders are thinking? Putting in buy orders, sell stops, buy stops, getting long, getting short, covering shorts, covering longs, playing off institutions, big orders, hedging, scalping, spreading, whatever. You got all this going on right in front of you, and everybody's so consumed about themselves. Stop being so selfish and look at what the market is doing. When the market's pissed off, not when you're pissed off. When the laser, as we call it, go red to green, and then there's downside, because we're able to tag where people are long and short, and then where they're stuck. And that's what moves markets. This is where we help people. Why price does what it does? No, why price moves in the first place. If you don't know why price moves, you're not going to be able to predict it, or you're going to have a hell of a time predicting something and you don't know why it moves. The why is important to everything. Like my dad would tell us growing up, if you know how, you'll have a job. If you know why, you'll be the boss. In trading, the how ain't good enough. You better know the why. You better know why price moves. You better know why you do what you do. Understand, that's the one thing trading has done for me and for many others who've been in it for any period of time, is it teaches you a lot about yourself, because everything in trading also could be related. Everything in life could be related back into trading, but it tells you and shows you a lot about yourself, your ability to work efficiently, do what you say, discipline, and those that could accept having lack of discipline. Do you accept it? Do you do what you said you're not going to do and then do that again and again, and you know you're doing it in real time, everybody's better than that. The reason why you do it is because you get addicted to the suspense of the volatility and the money you see being exchanged. But then also, sometimes you just haven't cleaned up the randomness of the market. It can't feel like a guess. You got to have some probability attached to your decision making process.